Welcome back to another episode of Financial Wellbeing with Emirates NBD. I'm your host, Dana Kamber. Today's episode is one that's very relevant. We're going to be talking about a product that's very popular but often misunderstood, and that is credit cards. Joining me today is someone who's seen credit cards used well and also not so well. Shahin Mozaffar, Head of Bancassurance and Value Proposition at Emirates NBD. Thank you, Shahin, for being here with us in our podcast series. I'm going to start off with, do you think credit cards are for everyone?
It's for everyone who are able to manage their expenses and have a discipline in using cards. So maybe not for everyone.
So who would you say should be a little bit more cautious? There are certain personality traits that people should be mindful of when they're opting to either get or not get a credit card.
If you're using the card to spend beyond your means, then it's definitely not for you. But if you're using it for the right reasons, then you should absolutely have one.
And what are the right reasons to use a credit card?
Well, credit card gives you a lot of advantages. And I think if you're using it for those, then you should. So those advantages include optimizing and maximizing the reward schemes and programs that cards have to offer. You might want to give a supplementary card to your spouse, kids, so they'll always have access to money. I think for those reasons, absolutely go for it.
And at what age did you get your first credit card?
I think I was probably 20 or 21.
So was it part of your first job? You got it then?
Yeah.
And from your experience, do you think people usually get credit cards at that age?
Well, I think nowadays they do, probably even at a younger age. They get supplementary cards. The parents issue them those cards, obviously with limits, and it helps them sort of build that discipline. So when they become independent, they're able to use it wisely. So, yeah.
Would you say that you were using it effectively from the start, or did you have a learning curve?
No, definitely not. I did not use it wisely from the start. I exceeded my limit. I spent on things that I probably didn't need at the time. And I had to actually take out a personal loan to settle and close the credit card because the interest was too high. So I learned the discipline the hard way.
And how long did that take for you to learn?
A couple of years.
Yeah.
Yeah.
And do you find that to be a trend with at least more so with younger generation?
Again, you have some clients that are so disciplined and so aware, and you have some others that would probably need to build that discipline.
Yeah, I think a lot of people tend to think credit cards and they get excited because it kind of like symbolizes adulthood in a way, right?
Yeah, it does. Yeah.
And what's some advice that you could give young credit card users for them to keep in mind? Maybe things that you wish you knew at a younger age.
The first thing I'd say, don't ever use it as a revolving line of credit. You have got to have the discipline, manage your expenses, pay down the card balance. They offer great benefits. You've got grace period depending on your billing cycles. So there's a lot of advantages that you have with cards, but you shouldn't fall into the trap of a revolving debt.
And if someone is getting a credit card for the first time, how should they go about their limit?
I would say stick to, this is just my personal view, but stick to 1, maximum 2 multiples of your salary. Don't go beyond that. Spend wisely. Take all the benefits that the card has to offer, but make sure you pay it down.
What are the worst ways someone could use a credit card?
Taking limits which are considerably higher than your salary, maxing out on those cards, not being able to pay it down, paying just the minimum because cards carry on average a 3% interest every month. And if you're just paying the minimum, you're just paying 5%, 3% of that goes towards interest. So you're not really paying it down as much as you're paying towards interest and other charges. So that would be the worst way to use credit cards.
So from your experience, do you see that people often opt to not pay the full bill? They would pay either the minimum or an amount that's, under the full bill cycle?
Well, it depends. You've got segment of clients who pay it in full. You've got certain clients that pay just the minimum. And you have people, the in-betweeners, they pay anywhere between 5 to 100% per month. So you've got all categories.
Do you
really.
notice that there is a trend within like maybe age groups when it comes to paying off credit cards?
You've got the younger generation that still have some time to really learn to build that discipline, whereas you have the more mature clients within the portfolio that really just pay it in full. So you've got the revolvers and you've got the transactors. The transactors pay it in full. The revolvers tend to revolve.
And if you were to elaborate a little bit on the revolving debt, how does that correlate with credit card usage?
Credit card is a product. You get a limit and you spend, you pay it off, you get to spend again. So in that way, it's revolving. Similar to an overdraft facility, for instance, unlike other products like a personal loan where you just keep paying it down until it gets settled unless you take a top up, for instance. So with credit cards, if you're not able to keep paying it down, the interest just keeps accumulating and makes it difficult for you to pay it down. So that would be sort of a debt trap that you wouldn't want to be in.
And can you explain a little bit more the accumulation of interest?
So every month you get charged the interest that's roughly about 3% on whatever you've used. And then there's a concept of charging interest on interest in a conventional bank. And that just keeps accumulating until you are able to pay down the outstanding balances.
So let's just say I spend and I pay a certain amount or the minimum amount. So the remaining would be where I would incur the 3%.
Yeah.
And then the following month probably is...
You get charged again the 3% on that.
Yeah.
And if you go over limit, then there's an over limit fee. And then there's interest that gets charged on the over limit amount. So it's just a vicious cycle.
It keeps building up. Yeah. And would you say that would be a time where opting for a personal loan to close it off would be a viable option?
100%. Because for one thing, you're given a 4-year window to settle and close the entire liability. And second, and most importantly, the interest rate on personal loan over a 12-month period is much lower than a credit card, which makes it easier for you to close it.
To manage it, yeah. How do you think credit cards contribute towards long-term debt accumulation?
Well, for one thing, cards eat up into your debt burden ratio, which is something that is considered, and there's a regulation around how much we can actually lend. So from that aspect, it does eat into your debt burden ratio. The other important thing about credit cards is how you use the card. So higher utilization on cards usually affects your credit score, but using the credit card helps build a credit history. So there's different aspects to look at.
I don't think a lot of people understand the relation between credit cards and credit, whether it's building it, as you mentioned. Can you elaborate a little bit on how that actually builds someone's credit?
So anytime you take a credit facility, and usually it starts off with a card, you start building a profile and a history. That credit history is something that is heavily relied on when in future you would want to apply for a credit facility. So they look at how you performed on a facility that was granted to you in the past. Were you paying it on time? Did you miss any payments? Were you maxing out on your card limit, for instance? Were you struggling to make those payments on time? So those are things that gets heavily looked at now that we have an established bureau in place.
On the building credit and opting in for different types of services, what are some benefits that consumers can gain from having built that credit?
Simply put, it gives you an upper hand when you go for a credit facility in future. For instance, depending on your life stage, at some point people want to buy their own home, for example, and when they go to apply for a mortgage product, they'd look at your credit history. And credit card is one of the simplest ways to build a good credit history. And if your score is high, it makes your mortgage application a lot simpler. So those are the main benefits.
I'm sure you've heard this question asked many times. Is there a best credit card or a preferred credit card that someone should get?
It really depends on the personal preferences of each person. We've got different types of credit cards offered by different banks. So it really depends. Are you somebody who travels a lot or somebody who likes to take advantage of the hospitality benefits that the cards got to offer, or cash back? So there's different type of cards for different. Somebody who loves shopping, for instance, would go for a card that gives them really good benefits on shopping. Or somebody who likes flying a lot, your Skywards card, Etihad cards are the most popular cards. Or if you're looking at the hospitality sector, for instance, Marriott Bonvoy that we offer in Emirates NBD is a great option.
And, a lot of people might have more than one credit card. And perhaps they would say, I'll use one for travel, one for, expenses locally. Is that something that is advisable, or is it something that people should be wary of?
It's normal to have more than one, but you don't need 10, for instance.
Yeah.
As long as you're able to use the cards for the purpose that you have in mind and you're able to keep a track of it, I don't see a problem with that. But when you have too many, you've got to keep track of the annual fees on those cards, because some of them would have annual fees. The billing cycles, you can set up standing orders, but some people don't. So it really, again, depends. You could have more than one as long as you're able to manage it, and as long as you're not taking higher limits on those cards, which again eats up into your debt burden ratio.
Are there specific questions that you could advise that our listeners ask the banks that they're banking with when it comes to deciding what card to get?
So look at the fee structure on the card, starting with annual fee, interest rates, and see or question the reward program and the exchange rate on the miles. So every card gives you certain miles, but you've got to see how much those miles translate to in dirham terms to then evaluate and assess which card to go for. There are plenty of cards that give you higher points for international spends than on domestic spends. If they're able to take a credit card with an appropriate limit where they can manage their expenses, I would definitely encourage them to take a credit card, because it would help build a credit history, and there are benefits that they could take from that your traditional bank account would not give you. You could end up getting a free airfare ticket, or getting free night stays at hotels, or getting cash back and being able to utilize on the spends that you have. That's something you would never get on a bank account. So I would definitely encourage credit cards as long as you're able to maintain that discipline.
Yeah, that mindful spending, I think if you do that wisely, then you get a lot of things in return.
100%.
What would you say is the best way people can benefit the most from credit cards?
There's a few ways. I mean, if you're paying down your outstanding in full, then what you're taking advantage of is the reward scheme, because you earn miles on these spends, which you otherwise don't if you were to use your debit card, for instance. You can take advantage of the grace periods because depending on your billing cycle, you could get anywhere between 18 to 50 odd days to return that money without incurring any interest. You could also have the option of breaking down your payments into installments, flexible installment plans, where you wouldn't pay interest. So if you take advantage of those features, then I think you'll be using it in the most effective way.
Do you think that installments from a consumer perspective should always be something that they would opt for, or do you think that there should be some precautions taken?
Again, everything in moderation, right? If you know what your cash flows look like, and you know that, for example, in this market, a lot of employees earn a variable pay in the form of either commissions or annual bonuses. And if you want to make a purchase before expecting those cash flows, it's okay to make a purchase, break it into installments, and then pay it off. So those are instances where you would use it. But if you're just breaking transactions into installments and that's just, endless, it's not something that's sustainable.
As a consumer or someone who has credit cards, would you say majority of them has that holistic view of all of the interest?
I think when it comes to interest and charges, I think we've come a long way. And with the consumer protection regulation, I think that's become more transparent to consumers. So they are aware. Pretty much the main components and charges, they're pretty much aware. So annual fee, interest rates, flexible installment plans carry a processing fee, sometimes an interest, sometimes no interest. So they are quite aware of these charges.
Okay.
And we've got our schedule of charges that's published and it gets updated frequently. So it is up to date.
And when people are looking to, let's just say, use their credit card versus their debits, sometimes you see people say, don't use a credit card for small charges. Is that something that people should be mindful of, or is that just, things people say?
Again, it depends. So usually, I, for one, I use my credit card like a debit card, but I always use my credit card because I take advantage of the reward scheme. There are certain categories where it's advisable to use your debit card if you're going for a POS transaction. Jewelry stores being an example of that. Normally, the merchants would add a 2% if you're using a credit card, but if you're purchasing cash, then it will be cheaper for you. And that's mainly because of the interchange.
What about the ATM? And if they want to withdraw cash, is this advisable to do so on a credit card?
No, that's the one thing I would advise against, to withdraw cash, because there are additional charges that you would incur if you were to withdraw cash from your credit card.
What's one, or let's just say 3 lessons that you wish you knew earlier on in your financial journey?
3 lessons on how to use a card?
Right, let's go finance. Let's go broad.
Save first, spend later. I would definitely go with that. That's a lesson that I wish I knew from the start. Would have saved a little bit more. And just not falling into this trap of a revolving debt. That is something that I wish I had learned.
Okay, on to my last question. What is wealth to you? What does it mean to you?
To me, it's not about what financial assets you've got or what possessions you've got. It's to me, it's as long as you have the means and resources to pursue whatever is important to you, that's wealth. It could be pursuing a dream, a hobby, a comfortable life, or just simply leaving something behind for your next generation. Whatever makes you happy, or giving back to the community. As long as you're able to do that, you have wealth.
So it's like linked to your values.
Yeah.
Thank you so much, Shahin, for spreading the awareness and sharing your expertise with us today, and for really setting that foundation towards healthy credit card usage.
Hope it helps. Thank you.
For everyone joining us today, if you have a credit card or thinking about getting one, just keep in mind that it all goes back to financial discipline. Make sure to build that discipline and awareness before opting in for any financial product. If you found value in today's episode, do share it across with your network who could also benefit from the insights shared here today. And I'll see you in the next episode.